This week, the Federal Reserve and central bankers from around the world gathered in Jackson Hole in Wyoming for the annual summit. This was the last one for Jerome Powell as the Fed chair, since his term is coming to an end next year. And arguably, this was the most challenging one for him, as Jerome Powell has faced shocking pressure from Donald Trump from the White House to cut rates regardless of what economic data signals. Donald Trump wanted, and he still wants, interest rates slashed. Lower rates could boost a shaky economy, stimulate markets, and maybe, just maybe, lift the Republican approval ratings ahead of the midterms. In a highly anticipated speech at Jackson Hole, Powell hinted for the first time that a rate cut is on the table as soon as the Fed's next meeting in September. The reason cited by Powell was softening labor market, slowing job growth, rising risks of unemployment. These are signals that the economy is cooling and the Fed may need to act, according to Jerome Powell.
The labor market is a case in point. The July employment report, released earlier this month, showed that payroll job growth slowed to an average pace of only 35,000 per month over the past 3 months, down from 168,000 per month during 2024. This slowdown is much larger than assessed just a month ago, as the earlier figures for May and June were revised down substantially.
Now, to phrase it differently, in very, very simple terms, the Federal Reserve is about to start cutting rates into stagflation. That means rate cuts into rising inflation with a weakening labor market. That's what it means. And it also means that many people will be left in the dust. Powell said, and I quote, "Risks in inflation are tilted to the upside and risks to employment are tilted to the downside." And that's a very fancy way to say stagflation.
So, putting the pieces together, what are the implications for monetary policy? In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation.
Nevertheless, markets surged on the news. Wall Street heard what it wanted. It heard that Powell is opening the door and Trump is getting what he wants, rate cuts in other words. But Powell was anything but optimistic. Powell's speech was very, very careful. He outlined a very complex, fragile economy. It is not collapsing, but it is wobbling. Now, if the Federal Reserve says the economy is wobbling, what does that mean? It means that we should understand that the real situation is much, much worse. Tariffs are pushing up prices. Supply and demand for labor are both falling, and the risk of sharp layoffs is growing. Powell called it a curious kind of balance. In other words, on the surface, things may look steady, but beneath, cracks are definitely forming.
Overall, while the labor market appears to be in balance, it is a curious kind of balance that results from a marked slowing in both the supply of and demand for workers. This unusual situation suggests that downside risks to employment are rising. And if those risks materialize, they can do so quickly in the form of sharply higher layoffs and rising unemployment.
And he didn't stop there. Powell took a subtle but quite unmistakable shot at Trump, reiterating that the Fed will base its decisions solely on data, not on political pressure. Powell said, quote, "We will never deviate from that approach." And that line actually earned him a rare standing ovation during his speech. But politics doesn't sleep, and of course his decision will be at least partially based on political pressure. Powell doesn't appear to have much of a choice, given the amount of pure pressure from the Oval Office. While Powell was addressing global financial leaders in Wyoming, Trump was actually in D.C. threatening to fire Fed Governor Lisa Cook over an alleged 2021 mortgage discrepancy. Never mind that it has nothing to do with monetary policy. It was just another shot across the bow, likely another warning to the Federal Reserve, effectively saying, do what I say or face the consequences. The pressure is only going to escalate. Whether you think the Fed should be abolished or not, I assume that you would agree that we are entering a very dangerous territory of authoritarian tendencies, from militarizing police to attempting to dictate the central bank's next move. Still, Powell stayed quite focused during his speech. He unveiled a new long-term policy framework which reflects a shift in economic realities. Inflation is no longer too low. It's been running above the Fed's 2% target for more than 4 years, and interest rates are much higher than they were a decade ago. And so Powell appeared to acknowledge that inflation will not go anywhere. It's not going anywhere, despite his previous statements of cooling inflation. Now, one important change that was announced by Jerome Powell during his speech in Jackson Hole is that the Federal Reserve will now watch for, quote, deviations in employment, not just shortfalls. This is a shift away from prioritizing job growth over inflation. This quite subtle, I would say, change signals that the Fed might act faster if inflation heats up again, even if unemployment rises. Powell also addressed the elephant in the room, and of course I'm referring to tariffs. He said their effects on consumer prices are now, quote, clearly visible and will continue to build. While he believes that the tariff-related inflation could be short-lived, possibly, he warned that it might not be, which of course we know that it won't be short-lived. That's not how things work. So here's the bottom line. Powell is signaling a potential rate cut, but not because Trump told him to, because the data might justify it, says Powell. That's his version of events. And yes, the Fed has already cut rates by 1 percentage point over the past year. Yes, policy is less restrictive than it was, but Powell is walking a very tight rope between rising inflation, a slowing job market, and quite relentless political pressure. So he's in a very, very difficult situation. Trump wants big and fast cuts. We know that. And Powell says, well, not so fast, maybe not so fast. However, following Powell's speech, it is quite clear that the Fed will cut rates by 25 basis points in September, in just several weeks from now. And to justify that move, the Federal Reserve will point to the labor market. The odds of the Federal Reserve not cutting rates in September fell to just 19% following Jerome Powell's speech, while the probability of a 25% basis point rate cut now stands at 77%. Let me know what your expectations are in the comments below. As always, I would love to hear from you. Thank you so much for watching this quick update. Remember to like, subscribe, and share. Follow me on Substack and Patreon for more content, and for my upcoming projects there, I would love to see you on those two sites, Substack and Patreon. I'll have them linked below. Enjoy the rest of your day, and I will see you back here soon. Take care.